So turning now to how Anglo Platinum will deliver the next phase of value. The next phase of value that we'll drive through this business is focused on 4 key focus areas. The first is around operational efficiency improvements, and that's through achieving and beating world benchmark performances, what we call internally as P101, as well as using modernization and digitalization to drive these efficiencies. The next focus area is around breakthrough opportunities, which enables a step change in production or value through new technology deployment known as future smart mining. The third focus area is all around projects, firstly around fast payback, high margin, value accretive projects, but also projects that have a potential for growth expansion. And then lastly, around market development, which continues to be a key strategic initiative for Anglo Plats to drive demand for new applications for PGMs. So over the next few slides, I'll just show you some of the examples of the progress that we're already making on these fronts. Firstly, some examples of operational efficiencies which are currently in execution. They include double benching at Mogalakwena, which is aimed at reducing the amount of waste tons mined and gaining a larger ore footprint. Rope shovel efficiencies at Mogalakwena, enabling cost reductions through higher equipment utilization. And then the modernization at Amandelbult, which will lead to both productivity and cost improvements. Some examples of breakthrough opportunities include, firstly, the bulk ore sorting at Mogalakwena. During the course of 2018, we were focused on the lab and doing the technical work, and then in the course of 2019, built a big pilot plant, and we're currently trialing now this technology, which aims to improve the grade that you put through the concentrator plant, so effectively just getting more ounces through an existing plant with only additional mining being done. The next area is around coarse particle flotation. During the course of 2019, we were working on the lab scale work and also on the flotation technology. We'll continue this in a full-on pilot plant in the first quarter of 2021. And the aim of this is to reject coarse barren particles much earlier on in the process, which unlocks downstream concentrator capacity and also reduces energy and water requirements. And then finally, we're deploying the use of extra low profile mechanized mining equipment at Amandelbult's Tumela 15E section. And this is aimed at using a separate mechanized section that will lead to safer and more efficient mining of the steeper narrow reef ore body. And the next 2 slides will show what we're doing on the project side. Firstly, this slide will focus on the fast payback project. So fast payback, high margin, value accretive projects. So this has been the kind of focus for the company for a number of years now. On this slide, you can see a selection of approved projects. They've been listed on the table. And you can see that the project's focus is on maximizing value, not necessarily volume, with our disciplined capital allocation focused on generating strong returns. And you can see that by the IRRs on the right-hand side of that slide. The second area on projects is around growth. And we continue the project studies on a number of our value accretive growth options at our high quality assets. The key project study is the potential expansion of Mogalakwena, and we're on track to deliver the project studies hopefully by for the first half of 2021. We continue to assess both the construction of a third concentrator with increased open cast mining, or the potential to upgrade existing concentrators combined with potential underground operations that we're currently studying. If we choose to do the growth through the third concentrator, that will likely take between 18 and 24 months, and that will result in the expansion of around about 500,000 PGM ounces. We have said that we don't want you to hold that to us because we're doing these expansion studies now and hope to finish those, as I mentioned, in 2021. The most progress study that we have at the moment is the replacement of Mototolo into the Der Brochen ground, which is now in feasibility study and hopefully should be delivered this year. That study is focused on establishing the Der Brochen new shaft, replacing Leboa shaft, which is now coming to the end of its life of mine. The potential expansion at Mototolo Der Brochen is also being studied, and what we're looking at that expansion is to see what new technologies we can use to help us use the existing plant and get more volume through that, and hopefully that has the potential to increase volume from Mototolo Der Brochen by about 33%. So this is a slide that we showed you in 2018 when we started talking to you about some of the future value that we could see from our base operations. And at that time we said that we thought that we could increase the margin, uplift the margin by another 5 to 8 basis points, and that by 2023. We did say that at that time that excluded any impact from price or FX or expansion. So it was just from the base business, demonstrating that we could uplift the value of this company. So in 2019, that middle bar, we already want to say that we're on that journey. We've already delivered 2 percentage points margin expansion due to the operational excellence that's already increased runtimes at concentrators, recovery improvements and cut-off grades, as well as the delivery of fast payback projects, such as the commissioning of the new chrome plant at Amandelbult in the course of last year. The expansion at Mogalakwena and Mototolo Der Brochen could lead to further growth in the EBITDA margin. And then, of course, on top of that, you can put whatever price and FX you think is likely to occur at that time. So the final 2 slides of this section just talk to a little bit about our strategic priority to grow demand for PGMs. And our market activity, as you know, is undertaken globally. In 2019, we invested $25 million to jewelry development through the PGI, focusing on creating demand in China and India. In China, as you know, we've seen a reduction in jewelry demand over the last number of years, and PGI is working with the industry to change the model and to change the look and feel to a more branded product in China, and we're starting to see the increase already in India over the last number of years. We invested $5 million in investment demand creation through the WPIC. We're promoting platinum as a viable alternative for investors, and in the last couple of years that's been spread globally, and in addition to that now, the team are focusing very heavily in China on retail investors and particularly working through the banks. We spent $6 million on industrial demand generation last year, and that includes our latest investment into Lion battery technology, which is aimed at launching the next generation of lithium-ion batteries that use PGMs as part of their mix. We've committed a total of $100 million over 5 years into AP Ventures, which has been able to attract already another $130 million of additional investment, $100 million from the PIC, but we've now got 3 additional companies that have joined this venture capital fund that have an interest in fuel cells, hydrogen, and clean energy. Last slide of this section talks to the momentum that we're seeing around hydrogen and fuel cells. 2019, we think, was an unprecedented year of growth in the hydrogen economy and fuel cells. We participate through our participation in, or our investment in AP Ventures, which has 6 portfolio companies focusing on the hydrogen economy value chain. Industry Alliances for Hydrogen Economy and the Hydrogen Council increased its membership to 81 members this year. We've seen growing commitments of deployment of fuel cell electric vehicles at a national level, at a governmental level, with 30 countries now having committed to having over 10 million vehicles with 10,000 refueling stations over 10 years. This has now been known as the 10-10-10 project. And this has been further backed up by the increasing availability of fuel cell vehicles, with now 45 fuel cell models on the market. The key roadblock to the broad adoption of the hydrogen economy and fuel cells has been the relatively high cost of hydrogen and the unavailability of hydrogen refueling station infrastructure. But we're seeing progress on both of those. The cost of hydrogen as a fuel has reduced by 60% now since 2010. And finally, we're seeing hydrogen refueling stations being constructed globally, and that's been up 50% since 2015. So you can see that fuel cells, which use platinum in particular, are now starting to become a current day reality.